Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live. Thank you again for those that are continuing to follow us on Facebook, the live feed. We appreciate that very much. We are always looking for different ways to get more and more people involved in the show. Watch the show, download the show. We'd love to, just so you, those that are watching the show or don't know, that this is a podcast, and so what we'd love to have you do is download the podcast. You could do that by going to iTunes and just typing in Real Estate Radio Live. You could go to Stitcher, Google+. You could go to our website, which is RERL-1564-Rates.com. That's RERL-1564-Rates.com, and you can download the podcast right there as well. We'd love to have you follow the show. We try to stay consistent and do the show on Tuesdays, Wednesdays, and Thursdays. However, we're making an announcement here pretty soon when we're going to probably add Mondays, most likely in the next couple of weeks, because we have an exciting new guest we're going to have on a pretty regular basis if it all goes well. Or most of you may have heard me talk the last couple of weeks about a new program out there. It's an equity share program which allows you to take equity from your home with no payments, and you share in that equity with the investor. It's a great program. It's an alternative to a reverse mortgage. It's an alternative to refinancing your home with these higher interest rates, and it's a great program to consider right now for many different ways. So I'm excited to announce that in our partnership. We're going to be having them on to talk about this product more specifically, most likely, and next week or the following week, and we'll have them continuing on the show for a while because I think it's really going to be a big piece in a market where a couple of things are happening. One, interest rates are going up, and people are hesitant to do things with their home. There's a lot of people that have more equity in their home. It's been, the statistics tell us that there's a lot of people that have a huge amount of equity in their home. And it's trapped to some extent because when you try to get it out, it's at a cost, right? For most people, it's at a cost. So if you refinance your house and take money out, that's at a cost. If you put an equity line on your home and take money out, that's at a cost. If you entertain this equity share program, you could access equity out of your house at no monthly cost, no monthly payments to this. So there's a lot of details around it, and the specifics are coming soon, but I'm excited. And I just think it's going to be a great product, an alternative, an option for people going forward. And that's one of the reasons we're going to be talking more and more about this program for sure. So stay tuned for that. And again, we try to keep it consistent. We'll probably do Mondays through Thursdays here coming soon, and we'll keep that as consistent as we can right around 3 o'clock Pacific Standard Time for those that follow the show and view the show as well. The topic today that I have is rates are up, and it's still a great time to buy. The reason I want to talk about this today is because I am tired, like most of you are, watching, listening to the media, the newspapers, the online articles, and I get it. After this many years, most of us understand the reason or how they advertise. They advertise with drama. Most news media outlets, whether it be written, online, television, wherever it is, podcast, a lot of people are very dramatic, and they want to say something that shocks you or say something that gets you nervous or grabs your attention so they could try to, get more eyeballs that way and get more people to listen. So you'll see a lot in the newspapers, rates are up, housing prices, people can't afford housing anymore. There's a lot of negative news out there. So I want to clear that up today because I'm in this industry. I study this every single day. I study the market, the rates, what's going on with real estate, lending, financing, and all the dynamics of real estate. So that's the reason for the title today. Rates are up. Yes, that's true. Rates are up. But I'm going to put some historical perspective on this. Rates are up, but it's still a great time to buy. And so let me talk a little bit about this right now. If you look at a chart, and obviously you can't see it while you're listening to the podcast, But take a look. Go to several different websites, or you could just enter in historical interest rate chart in Google. That's a great thing about Google. You could find anything. And you'll see that interest rate chart over the last 40 years, the trend of the interest rates. So when we say interest rates are up, and interest rates are at 5% or so, in the low 5%, yeah, they're up from a year ago. They're up from 2 years ago. And I think in 2013 or 14? I don't know. Maybe it's 16 times flying. When they hit the all-time low, I think it was 13 or 14. I don't remember. When the 30-year fixed was, I think, at 1 day or 2 days. It wasn't very long. It got as low as 3.5%. I think fixed on a 30-year fix, conforming somewhere in there. So if you're one of those people that are fortunate, some of those people are lucky enough to catch that. That was wonderful. So historically speaking, rates are still very, very low. If you look at this chart and you look at the data, 5% on 30-year money is still really good. Did it take some people out of the market? Possibly. Yeah, absolutely it did. But, every time the rates go up, it takes some people out of the market. When we had interest rates at 3.5%, if they went up to 4%, it took some people out of the market, believe it or not. When it went to 4.25%, it took some people out of the market, believe it or not. When it went to 4.5%, it took some people out of the market. When it goes to 5%, it will take some people. So my point here is, yeah, as rates go up, it's always going to take some people out of the market. It just is, because some people have fixed income and they can only afford so much. So if they're maxed out with an interest rate of 4%, if rates go up to 4.25%, which they have in past, then they may not be able to qualify. Now, there's other programs out there. That's another story for another time. They might be able to qualify, but speaking of general conditions and underwriting conditions and debt-to-income ratios, they may not be able to qualify if it goes up to 4.25%, for instance. So to make that statement is kind of an ignorant statement and makes no sense when I hear newspapers and people say, more people can't afford homes now. I wonder how many geniuses it took to figure that one out. It's crazy. Of course, some people won't be able to afford a home now, but I get it. Again, they're trying to sell newspapers. They're trying to sell time, more eyeballs, more information. They want you to listen to it. So I'm more optimistic. So I will look at it this side. Yes, rates are certainly up. They're higher than they were 2 months ago. They're higher than they were a year ago. We know that. And they could go even higher. By the end of the year, by the first part of next year, we could see interest rates in the mid-5s. And if you go back, and I hate to say, if you go back and listen to my podcast from several months ago or 6-7 months ago, you probably hear me saying that interest rates could be in the mid to high 5s by the time we hit 2019. Now, what do you do when interest rates come up? Again, some people, they're out of the market. I understand that. But there are other things to look at and to consider. And the one thing that I really want to drive home today in this podcast specifically is to give you an example why you can't just think about interest rates are up and I'm out of the market. This is my fear, what I hear people talking about, and the uneducated people that talk about real estate, and even people in the news media and people in our business talk about it this way because they're not educated and they don't understand the big picture. When someone says interest rates are up, oh my gosh, it's a bad time to buy. Oh my gosh, what's going on? The market's changing. No, it's a great time to buy, and let me tell you why. And again, I can't illustrate it with someone listening, but let me try to walk you through this the best I can. Let's go back a year ago, and let's say the interest rates were 1% less. Let's say you could get interest rates around 4%, okay, for the sake of our conversation here. And people are saying, oh my God, if I just would have bought a home 1 year ago when the interest rates are 4%. It's more complicated than that. It's more complicated than that. So listen to what I'm about ready to lay out for you. Guess what? The home that you looked at a year ago or would have looked at a year ago for $1 million at a 4% interest rate, number one, you might not have been able to get that home because it was such a hot seller's market. That $1 million home probably went for 1.1 or 1.2. In other words, it went for 10, 15, 20% over asking price, okay? Follow me here. So let's just say you were fortunate to get that home that went on the market for $1 million and you paid 1.2 for it. So you paid a $200,000 premium for that house a year ago in this example. But you're excited because you got the 4% interest rate, right? This is funny. It's not funny, but this is an example of people talk very surfacey, and they don't really get in the depth about all the integral parts that work within this business. So if you were to buy that home a year ago and pay 1.2 and pay a 20% premium, a $200,000 premium for that home, but now you got a 4% interest rate. Okay? Fast forward a year. You're thinking about buying a house right now. And if you listen to some of these people out there, they're going, oh, no, it's not a good time to buy. Rates are up and the housing market's changing. It drives me crazy. It just drives me crazy because these are comments based on personal assessments, emotions, no data, very little research probably, personal opinions. Don't get caught up in this. Don't get caught up in listening to people that don't study this stuff every day. So let me get back to my example. Fast forward 1 year. Interest rates at 5%. You're out looking at that same house that was on the market for $1 million, and because it was a seller's market, it sold for 1.2. Okay? Today, you're looking at that same house, and this is true. This is the data will tell it. That same house is an example. They put it on the market for $995 because they want to put it for less than $1 million because the market has changed. The house sits for 2 or 3 weeks, gets very little offers. It finally gets an offer 30 days later for $975. They counter back and forth, and they get the house for $975. So you tell me, and we can't do the math when right here, right now, as you're listening. What would you rather have? This is one of those tricks, like would you rather have a penny every day or $5 million? What would you rather have? The house that you purchased a year ago at $1.2 million at a 4% interest rate? Or would you rather have the house that you just purchased at $975, so $225,000 less at 5%? You tell me. I'll tell you which one I would rather have. It's a no-brainer for me. The 5%. I would rather have the higher interest rate. You know why? Because I just paid $225,000 less for a home. I don't care about the rate. Not that much. Now, if the rate was 10 or 11%, it's a different story. But you see what I'm getting at here? Don't get so hung up in these interest rates as much as the market and whether it's a buyer's or seller's market. See, the last 3 or 4 years, it's been a strong, super strong seller's market. Sellers had the power. You guys remember that. Anybody that went through it, we all went through it. They were turning people down left and right. And you'll hear me say this too, which is not funny, but it is. I hate to say I told you so, but all those years when these real estate agents in the market and some of these people were discounting the buyers and throwing them aside and saying, don't even put your offer in, and treating these people with disrespect, I would say be careful. Don't ever do that, because one of these days you're going to need buyers. And guess what? Guess what real estate agents, and guess what the market, and guess what us in the lending business, guess what we need right now? We need buyers. We want buyers. Isn't that funny? Just a year or so ago, people would say, don't waste your time. You're putting 10% down. You're doing FHA. Don't waste your time. You're not going to get the offer. Don't even do it. I'm not going to waste my time writing that offer. Mistake. It's a mistake, not because it's the mistake the way you said it. It's a mistake the way you handled it. It's not a mistake in that you were assessed. You're probably right. They probably did not have a chance. We all would agree with that. But it's the way people were treated, and they remember that. I can't tell you how many people I talked to over the last 5 or 6 months that had made comments about this. Joe, they didn't even return my calls. They said, don't waste your time. It's ridiculous. Unless you have 50%, unless you're all cash, don't waste your time. And again, it's not because you weren't being honest about the market. It's how you presented that message to that person that was wrong. And this happened a lot. So my point behind this is don't get so focused on the interest rates. That's why the title today. Interest rates are up. Yeah, but it's a great time to buy. Run those numbers. I could tell you, you'll be a lot happier. The person that pays $200,000 less than a house with a higher interest rate is the one that won. You won. And I'm not saying it's a bad situation. The person bought the place at 1.2 at 4%. I'm not saying that's bad. It's not, because if they own that house for a while, they're going to be fine too. My point is, when you pay $225,000 less for a home, imagine the time it takes to recover that equity. Think about that. So the other psychological dynamic I want to run by you right now, as I'm going through this, and I hope I'm keeping your interest here, is that using that same example as a year ago, that person paying 1.2 in a premium at 4%, and now fast forward a year and you paid 5% interest rate, but you got it for $975, right? How do you think that person at 4% is feeling right about now when the market makes an adjustment and the place that they bought for 1.2 now is worth $1 million or less? So they have additional recovery time that's going to take place in the market, that has to take place in the market before they get to the point where the house is at the price that they bought it. Now, I don't think that it matters when someone's buying a primary residence. Most people just understand the fluctuations of the market. It just is what it is. And so 10 years from now it won't matter. Temporarily it might matter. But I bring this up is because I want to get away from the negativity that's brought by our industry, the media, and everybody else. Just because rates are up, they're putting the fear into people, and they're saying the market's going to stall and it's a bad time and you've already missed the window and all that stuff, which is not true. All right, here's what I'm going to do. I'm going to take a quick break. For those that are watching us on Facebook, stick with us. I am going to be back with you. We're going to take a quick 1-minute break. Again, this is Joe Kuchera with Real Estate Radio Live. The topic today, rates are up, but it's still a great time to buy. I'll be back with you in just a minute.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Getting ready to buy or sell a home in 30, 60, or 90 days? Check out BundleSelect.com to find out how you could save 20% or more on your entire transaction, real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. BundleSelect's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling real estate, lending, and title services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. I'm here to tell you BundleSelect.com is the best way to save money on real estate. By bundling services, you could save tens of thousands of dollars. This savings model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with the national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker License Number 004666902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. Thanks again for those that are following us on Facebook. Thank you again for those that are downloading the podcast. I don't think I've mentioned for over a week now. Very, very excited and honored that our podcast, Real Estate Radio Live, was selected as one of the top 25. We were 19, by the way, out of 25 on the web in regards to real estate. So that's quite an accomplishment. It's an honor, and it's great because there's a lot of people that have done a lot of work on the show for the last 7 or 8 years, and it's great to see the following. It's great to see the thousands and thousands of people that download the podcast each month. So I want to thank all of you. If you're listening to this podcast and you're a regular listener and you're a person that's downloading on a regular basis, thank you, and I mean that. Thank you very much. I hope that you have gained value, insight, and wisdom in terms of real estate over the last 7 or 8 years for those that are following the show, and will continue to provide you with more and more value. You've heard me say before, this is a pet peeve of mine. I want to continue to work on, make sure that I offer shows, content, information that is valuable and is something that you learn and you could take and use it and pass it on and feel like you're smarter and more educated once you listened to the show and you didn't know some things and it brought some light into something. And that's what I hope. I don't want to be one of those shows that just come on every day and throw out statistics to you and talk about the market and the top 1% and what's going to happen in this. I want to provide you with really good, solid information so that when you are buying or selling or financing real estate or doing anything with real estate, I hope that we provide you with some nuggets or some information that help you in some of your decisions, that get you thinking. And when you're about ready to buy or sell or finance, it gets you thinking about maybe some of these questions. What should I do? Who should I call? Who should I work with? What's the right approach here? And that's the goal. And we'll continue to do that. So again, thank you for all those of you that follow the show, download the show. I appreciate it so very much. I think we're going to have more and more. You're going to be excited with a lot more of the guests and content we have as we close out 2018 and roll into 2019. The topic today, again, rates are up, but it's still a great time to buy. And the reason I wanted to talk about that, as I outlined in the first segment, is that there's a perception out there in many cases that a lot of people get frozen, unfortunately. They listen to the media, they get caught up in the hype, and they get caught up in the negativity. And if you read newspapers and articles and a lot of this stuff, it's the cloudy, gloomy day that interest rates are up, and it's nonsense. Yeah, rates are up, but it's still a great time to buy. And I just illustrated some of the reasons why in the earlier segment. So again, let me just recap that. It's not the interest rate you pay as much as what you pay for the house. Remember this. It really isn't. And here's the other dynamic of this, right? If you're paying a higher interest rate, but you're getting a better price on a home, the example that we used was over $225,000, guess what other advantage you have as the person that bought in a market, a better buyer's market, with a higher interest rate? 2-3 years from now, if rates go down, or 4 years or 5 years from now, if rates go down, you could take advantage of the rates going down, and you still did a great job of getting in at a great price. See, the person that buys at the top of the market or at the peak or the height of a market, and again, this is not negative to the person that does that. I went through this part myself. I did a move up. I bought a primary residence in Willow Glen at $1.3 million. And guess what? In 2005, it wasn't the peak of the market, but I think the peak of the market was like 2007. So we were a couple of years away from that. And then it came tumbling down, right? Most of us know what happened in 07, 08, 09. It got ugly. I never really worried about it so much. I saw it because it was a primary residence. But at one point, the place that I paid $1.3 million for, at one point was worth less than $1 million if I were to sell it. But I wasn't going to. Did I know it was going to come back like that and even more? No. But I didn't worry about it because that was our primary residence. So the example, again, is this happens a lot. So don't worry so much about, and this is not an indictment on people that buy at the peak of the market. Believe me, I'm just using an example for the people that step back when the market changes a little bit and rates go up and they start to panic and go, oh, my God, I guess I missed the market. No, you didn't. You didn't miss the market. Now is a great time to buy. I was just on the phone. We got several people in the contract over the last couple of weeks. I was just on the phone with some clients last night, and they asked me these questions. I love these questions, and I love having these conversations with them. They're saying, Joe, yeah, they were actually looking 6-7 months ago, and I saw the market changing somewhat. Now, I didn't know it was going to change, and they were getting ready to put an offer. We talked about this. They were getting ready to put in an offer on a place that they really didn't like, a neighborhood they really didn't like, but they were caught up in the hype. And they asked me, and I said, I wouldn't do it. Hold off. Don't do this if you really don't like it. Now, if it was something they really, really liked and it was a great neighborhood, that's a different story, right? But they're about ready to make a huge decision on a place they really didn't like and a neighborhood they really didn't like. I said, don't do it. Even if it takes 6 months or a year or so, don't do that. And so sure enough, they didn't. And now, fast forward 6 months later, it's a buyer's market. Guess what? They're getting ready to put an offer on a place tomorrow. They're super excited about it. It's a great neighborhood. It's affordable. They actually, might even get some credit from the seller. It's a great situation for them. it is a great time to buy. For those people that are hesitating or step back, don't buy just to buy. Here's what I'll say. If you're thinking about it, you should do it. And the reason why is a couple different things. One, a year from now, 6 months from now, a couple of years, we could get back to a seller's market. It's not too far away. A lot of people will go, well, how's that going to happen, Joe? Well, because we got as low as about 600 homes on the market in Santa Clara County. That was about as low as we got, right? I don't know the numbers now. I looked in the last couple of days, but let's say it's 1,500 to 1,600 homes on the market now in Santa Clara County, right? That's triple. That's triple what we had. So some people go, oh my gosh, the market's flooded. Not really. You know what, on average, what we would consider a normal average market, you know how many homes would be on the market in Santa Clara County, including condos and single family? Be more like 4,000 or 4,500. So you see what's going on here? We still, historically speaking, have low inventory. So the reason I bring this up is that it wouldn't take all that much to get back to a seller's market. If all of a sudden the inventory starts drying up, people say, yeah, I'm not going to put my house on the market now. And over the next year, a lot of that inventory gets bought up, and now you're back in this 600, 700, 800, range of inventory on the market. It becomes a seller's market again. This is why I'm suggesting that if you're a buyer, get out there and make the move now. It's a great time. And please do not worry about the interest rates. Interest rates are not that high, historically speaking. Run the numbers. Before we close out the show today, the last thing I want to mention is, speaking of buying and selling, there's a great program. You've heard me talk about it before. I'm going to do a video on it this week and get it out to my clients and real estate agents. Cross-collateralized program where you cross properties. Let me real quickly go through this with you. It's more detailed, and if you want more information, contact me, email me, call me. But I had 2 people this past week get in the contract by using this cross-collateral program. What happens is we take their existing property that they live in, we look at that. I'll give you an example, so it's probably better to do this on a podcast. I have a lady that's downsizing. She has $1 million home in Santa Clara. It's approximately valued at $1 million. She owes, actually, she just paid off the loan a while back. So it's free and clear. She owns nothing on it. She wants to buy a house in Morgan Hill. She got in a contract to buy a place for $780,000. Okay, downsizing. However, her home's not quite ready to sell, but she really wanted to buy this house, and her house needs some work to do. So the real estate agent and I have been working together for 20 years, and he says, hey, what can we do about this? We talked about the cross program. Talked to the client about it. Here's what we're doing. She got into contract. We got her pre-approved. Listen to this. She's buying the $780,000 home, only putting 10% down. She's keeping her home. We're using the equity in that exiting property for a virtual down payment, putting a lien on that property. We're giving her the 90%, a 90% loan to purchase that home in Morgan Hill. She'll purchase the home. She'll keep her existing home. She'll work with the real estate agent to get it ready to put it on the market. It's probably 4 or 5 months from now, maybe less. And when she sells it, she'll take out this loan and get permanent financing on a longer term. Right now, it's a 5-year fixed interest only. But we could do these things. Don't forget about this. If you're listening to this podcast, you're hearing people that are struggling. They're going, God, I'm not quite sure I want to buy because I got to sell my house and it's not a seller's market anymore. That's great. We could help you buy the house without selling your home. We do it all the time. And this program has become more and more popular. The problem is a lot of people aren't familiar with it, and they shy away from it, and they don't offer it. A lot of people in my industry don't educate themselves on these products, so they don't offer these products. So if you're listening to this podcast and you know someone that is struggling to think, I don't really want to sell because the market's changed, and what if I don't get enough for my house, but I really want to buy because it's a great time to buy. This is a perfect program for someone that doesn't really need to sell their house at the very moment, but they want to take advantage of the market and buy right now. It's a great program. So if you want to know more about it, if you're a real estate agent listening to it and you want to know more about it, contact me. You know to get a hold of me, RERadiolive.com. That's RERadiolive.com. Email me, call me. We could run through that for you. If you're listening to the podcast yourself, you know someone, friend, family, coworkers that are struggling to try to figure out what the right thing to do is and what kind of programs are available, have them give me a call. That's what I help them do. That's what I will help them do. I'll sit down and figure out if there's a good solution for them. All right, we're going to duck out for the day. Again, remember, rates are up, but don't let the negative media get to you. It's a great time to buy. This is Joe Kuchera with Real Estate Radio Live. Thanks again for tuning in today. Have a great afternoon. Take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.